Welcome to BQ Prime's earnings conversation with Bajaj Electricals, and I have with me EC Prasad, the company's Chief Financial Officer, to decode the fourth quarter result. Good afternoon, and thanks so much, Mr. Prasad, for taking the time.
You're welcome.
Uh, Q4 has been decent for the company, with revenues are up 12%. Margins have come in at 5.7% versus 4.7% a year ago. Mr. Prasad, could you tell us where the margins are headed from here on, given that raw material prices have started easing from its peak levels?
Yeah, we are still seeing demand pressures in the market because of the high inflation which was there, and apart from the interest rates hike that was prevalent in the market, the demand has still not come back. So it's sometime away. We feel that about in 2 quarters from now, I think things are will be starting to look up, and the margins will also go up. Hopefully, the commodity rates will stay where they are or start cooling off from now on.
All right. Where do you see the margins heading in terms of like what would be the sustainable range in terms of margins going ahead?
So we are looking at a double digit margins, and which has been our guidance in earlier as well. But having said that, with this commodity rates up, we could not sustain that momentum, and we are close to about 6-7% now. Our aim is to improve the margins about a percentile point from here on by the end of next 2 quarters, and hopefully, if things go well, reach up to about 8% margin by end of the year.
All right. Do you also, plan to take price hikes or maybe price cuts, given that costs have come down a little bit, and to pass on the benefits to the consumers?
So honestly, we have not been able to take the entire price hike. So whatever has risen, we have not been able to pass on, and that is one of the reasons why we still have the margin pressures on us. Having said that, I mean, there is no scope of reduction in price at this stage because, as I mentioned, we still are feeling the heat of the increased commodity. The commodity rates are still not back to the pre-COVID level. Overall, there has been an increase of to about 20-25% in the cost, whereas we have just passed on about 14-15% into the market over the last 2-3 years. So pretty difficult to reduce prices at this stage.
Right. Mr. Prasad, the consumer-centric companies that have reported earnings so far, the one thing that is common across commentaries is the slowdown in consumption. You have also mentioned, right, the demand has not come back. What is the scenario, or what is the demand looking like in the rural, especially, and also what is the outlook according to you?
So as I mentioned, probably another 2 quarters before the demand starts coming back, especially in the rural and even in the urban. If you look at the middle class, the lower middle class are under stress because of the high inflation, high interest rates, and because of which people are pushing the discretionary spends. And I think one good thing is the high capex inflow which the government is pumping in, which is creating employment in the economy. And with all of that stuff coming, with inflation easing, I think 2 quarters from now on, I think things should start looking up, especially in rural areas and the middle income, lower middle income segment.
Okay. And coming to the demerger of your power transmission and distribution business, are you on track with all the approvals that you said you get in another 9 months or so? So where are you on that, and how much more do you think it will take for the plan to materialize?
So our final hearing with the court is on NCLT court is on 8th of June, and preferably if everything goes well, we are targeting 1st July to split the company.
All right. And going ahead, what would be your investments like in the consumer-centric business?
So we are now currently focusing on 2 elements. One is the product and other is the brand. We are spending heavily on both these aspects, on R&D as well as the brand. So that is going to be our focus for the next couple of years. But having said that, we are not averse to any organic or inorganic growth if right opportunity comes to us at this point in time. But short-term investment will be predominantly on developing our brand and developing our product.
Okay. Could you also share your, how much the capex plans for expansion that you have set for FY24?
About 150 crores. But not
Okay, and that
all
would
the
be
capex is
towards.
for expansion, but some bit is on the expansion, some bit is on modernization of our existing facility, some bit on our IT side of the things.
All right. Thank you so much for your time, sir. That was all from my end.
Thank you, Sister. Welcome.